Okay folks, welcome back to another update. Today we're looking at the German DAX and the Nikkei, the Japanese Nikkei. The DAX has actually reached new highs, whereas the Nikkei is consolidating and pretty much been going sideways for some time. Before we go any further, make sure you hit that like and subscribe button to support the channel. Looking at the outlook for both the DAX and the Nikkei, the DAX 40 index has surged approximately 25% since January 2024, reaching record highs. This growth is primarily driven by major companies like SAP, which saw a 70% increase in 2024. Despite Germany's domestic economic challenges, including a projected GDP growth of just 0.3% in 2025, the DAX's performance underscores a global orientation of its constituent companies. The Nikkei in Japan, after a significant gain of nearly 20% in 2024, the Nikkei 225 has remained relatively flat in early 2025. Analysts anticipate the index could reach an all-time high by the end of 2025, driven by attractive valuations, low interest rates, and ongoing corporate reforms. However, factors such as US trade policies, Bank of Japan's interest rate decisions, and a strengthening yen are influencing the market's current trajectory. So what we look at first is the long-term trends, and this is the German DAX. So we look at the monthly, the weekly, and the daily. So what we had here when we drew our last chart for the monthly, we did have a declining CCI peak or high. Now you'll notice there it's actually higher than a previous high there. It's a very long-term divergence. Now we're going to invalidate that. That CCI has risen above that previous high, so we're going to invalidate that divergence. That no longer applies on the monthly, and there's no shorter term divergence on the monthly to look at. But at the moment you'll notice it's broken above the moving average of the price, but also above the moving average of the CCI, giving us a nice strong bullish trend on the monthly. On the weekly, we did have a couple of divergences here. You can see this first one down to that peak there. That was a lower high on the CCI versus a higher high on the price, and that pulled back, and that hit that minimum 23-38% retrace level. So if I zoom in on this one, if we take back from that one there, you see to pull back let's go back to that level there. That's at 23-38% retrace to that significant low. We take it back to the low before, significant low before the divergence started, and that's where that rectangle's marked. That was a pullback in that level there for that first divergence, and since then the CCI has risen, and it started falling off again at that point there. Now you'll see there, that's actually slightly low, still slightly lower than that point there, and that's that second divergence at that point. Now that hasn't pulled back yet, so we can effectively call that a continuation. So if we pull that up to that level there, and move that to that level there. So what it looks like now, we've got another bearish divergence, and this is a very longer term on the weekly. Now on this one, we expect a pullback if it does retrace from where it is at the moment. We take it back to, you could take it back to there, in which case you'll see a pullback to at the very least that little area there, that 23-38% level. Or if we take it back even to that significant low, then we just drop it up by a few more points to that level there. But I'll leave it at that level for the moment to take it back to that level as a minimum. And we could see a pullback from that point. Of course, if this CCI keeps rising and rises above that previous high, then we're going to invalidate the divergence. So we'll just keep that currently drawn. But at the moment, you'll see the price is still rising, so we might see further upside. On the daily, again, here we've got a new high. Now that's continuing to break higher. We did have a previous peak there at a resistance, and that's actually breached that resistance. But you'll notice here on the daily, that high is about just a bit higher than that, so that's not a divergence. We had a divergence back here, of course, and that was marked by that 23% retrace to that level. But at the moment, you could argue that's a double top on the CCI, and if that CCI starts to fall, I'll just mark it now. That's pretty much a double top versus higher highs in the price. Now the price is still rising. So long as the price keeps rising and the CCI keeps dropping, we're going to consider that a bearish divergence. So I'll keep a close eye on that. But at the moment, there's a bearish divergence in play, although the price is still rising. So again, we'll keep an eye on that. Now if we go to the intraday chart, what we've got back here, we take direction of the higher time frame. So if you're trading on the 1 hour, I've got the 1 hour here. You can interchange this with a 2 hour, 4 hour, 15 minute, etc. You take long trades only. Don't go against the against the trend on the 1 hour. So here, for example, whenever the CCI breaks above the moving average, and it also breaks above the price chart, we take long positions. We always pay attention to these bearish divergence. You'll notice here we've got a higher high on the price, lower highs on the CCI, and the price eventually pulled back and fell off. And if I was to draw a Fibonacci there, you can see there it broke down to the 61%, then it bounced. I don't trade these divergence. I read these as a potential exit. If I haven't already, and it was a potential exit to get out of the trade if I start seeing a bearish divergence. You should get out of the trade actually a lot earlier when that price break. When the CCI breaks into the moving average. Here we've got another bearish divergence. Lower highs on the CCI versus higher highs on the price. And again, if we draw a Fibonacci between that high and that low, you can see there it's actually broken through that 23%, almost hit the 31%, and it's bounced out of there. So that's another retrace that's happened. Let me just mark that. So what we look at now, you would take long trades when the CCI breaks above the moving average, and the price also does. So what we do is we take a ruler. So you would have taken that first trade at the close of that hour. This is on the hourly chart, of course, and you close out the position when that closes there. That's 0.13% gain in 10 hours of trade. Avoid going short because we're only going long in direction of the daily. Take another long position there, and you close it out when that CCI breaks into that moving average band on that candle there. That's a 0.25% gain in 12 hours of trade. A couple of potential false breaks here, nothing too dramatic. You may want to open a position there and hold it. You may have a stop loss down below those recent lows, or even into this moving average range of the price. Or if you want to be strict with it, when it breaks into that moving average of the CCI. Now, because that's very narrow, you could possibly hold that a bit longer term, unless it breaks a lot lower. And here you would close it out once you get a bit of a gain with that CCI breaking into that moving average range. At that point, so it's 0.67% gain in 18 hours of trade. Again, another couple of false breaks, but now it's starting to break to the downside. So you may want to take out a stop loss on that one if you got into that one there. The CCI is broken below, so that's potentially going to be maybe a bit of a retrace. So this is the Japanese Nikkei. Now what we've got here on the monthly, it's actually broken down into a bearish trend at the moment, even though the price is pretty much consolidating. And that's a result of this bearish divergence. So if I zoom into the monthly for a minute, you can see if there are lower highs on the CCI versus high highs on the price, pull back. And that you can see there the wick on that candle. And if we take it back to that significant low, you can see there it broke very quickly below the 23.38%. Even if you took it back to that level, that low there, that actually penetrated that 23% as well. So that's how you draw the Fibonacci retrace, and that's a very long-term bearish divergence. Moving back here, just a bit of history, we had another bearish divergence. Lower highs on the CCI versus higher highs on the price. Broke down, hit our target, then it bounced out of there. That's a minimum target, and more than 90% of the time it hits that range. So on the monthly, just be careful, it's in a bearish mode or bearish trend. On the weekly, we had another bearish divergence here, long term, and that's still in play. And you can see that it broke down, hit its minimum range, but notice the CCI is still dropping. A couple of little bullish trade or bullish momentums happening, very narrow moving average range, but that's because of this consolidation that's happening, causing a very narrow moving average range on both the price and the CCI. So very, very cautiously taking long trades only on the intraday if you want to do that, but otherwise I'd suggest it's going to be more of a downturn, even though it's hit its minimum target range on the weekly. On the daily, it's actually hit this within this band at the moment, this minor support and minor resistance. It's actually bounced off that minor resistance at 46.20. And currently mid-range in there. Had a couple of little ups and downs, very much a roller coaster event above the price and the CCI. So again, just cautiously going in either direction depending on which way you're trading on the intraday, giving you very minimal returns at the moment. I'd like to see it break a lot higher or a lot lower to take more decisive bullish or bearish trades. But at the moment, it's in a neutral positioning on the daily. So avoid going long or short until we see it break above or below those levels. On the intraday, again, don't take any long or short trades until you see it break above or below here. But at the moment, you can see here, similarly, it was what's happening on the hourly, pretty much consolidating a very narrow range of moving averages. So again, I just stick to the sidelines and wait for this to be more decisive in terms of where the daily is going. But what you look at doing is once you see a fresh breakout potentially on the daily, then you would have taken some long trades. Now this one gave you a false break, if you like, according to the daily, because even though the price was above the moving average, you notice the CCI started peaking with lower highs. So you can see there, lower highs on the CCI versus higher highs on the price, and that was your first warning that there might be a weakening in the price. Now that actually pulled back a bit. Then the price started to, after consolidating a bit, started to rise again. Bit of a rise here on the CCI, but notice it's still below that previous low. So that was also another continuation of a bearish momentum. Kept going, reached that resistance as we said, lower highs on the CCI, higher highs on the price, and eventually it collapsed. Now you wouldn't have potentially gone short here because the daily was still bullish, but you can see here when it did collapse, it collapsed quite strongly, and that actually broke down, if I draw a Fibonacci, to that low, well below the 61% before it started regaining some strength and rising from there. But at the moment, notice the CCI is still consolidating, even though the price is rising ever so slightly. So again, I'd be sitting on the sideline waiting for a more decisive trend on the daily if you want to trade on the intraday. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.